This is Jeremy Wentworth Stanley. I'm the fellow who has a hyphen in my name. The hyphen is silent, but I am anything but that. Respectonomics brings you the Living Economics, and Living Economics is a bi-weekly, twice a week offering podcast. It's brought to you by your Voice of Respectonomics, Jeremy Wentworth Stanley. And we are going to, here we are at the beginning of June, we are taking a look at the economy in the context of some major developments. One of them is the projection on oil prices. This has become brought forward by Exxon and Chevron, who are now talking about oil prices rising to $145 to $150 this year. We also have more reports now about corporate debt. Corporate debt is growing in leaps and bounds in significant volumes, and it is also now doing something a little bit different. Corporate debt is now being denominated in different currencies. That means, in other words, instead of borrowing the funds in one's own domestic currency, Canadian dollars, US dollars, but US dollars in particular, that borrower is now borrowing money in different currencies. The theory behind it, of course, is to diversify one's exposure to different currencies. The financial reason, the attractiveness of doing that is that maybe another currency will offer debt at a lower cost than would be the case in one's domestic currency. We see consumer confidence is now at record low levels. That's, of course, a comment on the economy. We see the tapestry of debt. And by the tapestry of debt, if you think of a piece of tapestry, it has an edge to it. In fact, it has four edges to it. And the edges are starting to fray. We're seeing mortgage payments being delayed. We're seeing credit card installment debt being delayed as well. Same with automobile loans, lines of credit, and so on. And when you get a fraying at the edge, the one problem is it's very difficult. If you've ever had a piece of tapestry in your hand and it starts fraying, it's awfully difficult to bring back that piece of thread that's been pulled away. The consumer today, we believe, is experiencing something else as well. We know about the angst and the concern, the worry about job security and the way that governments are operating, what you might call the level of trust. There's a sense of fear. There's the imposition or the revelation of artificial intelligence. I think it's bringing us all to the point of wondering what it is, what does it mean, and so on. And I will put one more thought your way, and that is that I think the consumer is exhausted. I think many of us are finding that our lives are becoming distended. We look like the end of a rope that's got splayed out, and you wonder if you're not being pulled in many, many different directions. And as that piece of rope is frayed and pulled in many directions, it weakens the structure and the value, if you will, of that piece of rope. So, with that in mind, I believe that the consumer is exhausted, being pulled and pushed in different directions. We have governments today. We always know we would have different problems. The old story is that we always have had problems, and that the problems of yesterday, the only difference is they're different from the problems today. But if you have different problems, you need different solutions. And governments are very good at taking yesterday's solutions and applying them to today's problems. Classically, we all know that we're in a world of an inflationary bias, whether it's at the gas pump, whether it's at the grocery store, whether it's getting your car serviced. We know that these prices are all rising, and governments are talking about raising interest rates. Well, raising interest rates is a good way to stem the demand for credit, but in actual fact, a lot of these price increases are more related to structural issues outside of the influence of interest rates themselves. We have in the stock market, we have extremely high prices. Many people are rubbing their hands with glee and saying this is great. The fact is that the stocks are trading at significantly higher multiples. Multiples as a means that a stock is pricing itself in relation to its earnings, its profitability. If that multiple is high, that is an expectation that these earnings and these profits will continue to grow. That's what we have today is the high stock prices and the high multiples. And the other part is we also have the consumer response, which is called demand destruction. Demand destruction is when there was something that we did habitually. Maybe we went on a vacation, maybe we went out to a nice restaurant once a month. Whatever it is we have been doing, we are going to start or have started to exhibit demand destruction when we say we're not going to do that anymore. And there's an old song that some of you may remember back, actually goes back 60 years, and it's called "What's It All About, Alfie?" And I think we're asking that question to ourselves today. What is it all about, Alfie? It's an interesting song. It was Diane Warwick was the one who sort of brought it to the tabletops, but it was a song that 60 years ago, and it deals with the love and care for others or looking out for ourselves. And I suspect that's our great dilemma at the moment. Do we look after ourselves or do we think about loving and caring for others? And what I'm getting at here is when we look at the economic profile today, I think we all have to come to the table with a bit of trepidation and a bit of concern about how it's all going to end up. We know that Jamie Dimon, the CEO of JP Morgan, has been concerned about the quality of the credit cards, for example, and one of the banking responses to credit card delinquencies is to cancel credit cards. That means, in other words, somebody gets a call and says your credit card is no longer going to be operative. With all of these things, we come back to what's it all about, Alfie? Because one of the things that Respectonomics believes in and living economics wants to bring to the table is that if we roll out certain situations or conditions, we owe it as a matter of, well, policy, practice, we owe it to be able to talk about what are the next steps. And the next steps are very difficult to identify. We live in a world where politicians are operating on the basis of they will spend money to get the votes. We have governments that are, let's just say, roughly speaking, unreliable. And when we put all this together, we don't have that sort of railway track that says this is what we must do. But I think the first thing is this, is to make an acknowledgement of where we are in this economic condition, this economic frame at the moment. You'll notice I didn't say cycle. We go through cycles. There's a lunar cycle. There's every kind of cycle. Tides go in cycles. Our bodies go in cycles. Cycles are fine. Things go up and things go down. We get compression and we get expansion. We know that. The question that is coming to the table now is whether or not we are looking at structural issues. Because structural issues would say that if the bicycle is no longer sound, it doesn't really matter whether you pedal because it's not actually going to go anywhere if the main frame is broken. Therefore, first of all, the sense of acknowledgement. And then I think what we need to do is to think about, if we're going to talk about acknowledgement, to talk about the things that we do have. And one of them is the entirety of the human being. Respectonomics, its girding principle, its binding issue is to respect the dignity of the human being. That is the centerpiece, it's the hub. And what I'm getting at here is if we think about the dignity of the human being, this may be, as much as we may pause for station identification, it is in fact a time to reflect on one's own dignity, one's own worth, one's own value, because true wealth can only come as a result of value. And if we have the value of dignity within ourselves, that is where we will develop true wealth. And therefore, we're talking about a process of restoration and moving away from the sense of the material necessity and looking more now at what is both physically, mentally, and, if you will, spiritually, but looking at what is available within this concept of dignity to each and every one of us. Because that in itself is a prize, it is a gift that we each have, it is a blessing, and it is one to which we should be providing all of the due respect. Respectonomics speaks a language of restoring respect for individual dignity. Dignity is individual, it is personal. You might even call it unilateral. It belongs to the individual. And whatever we can do in the terms of respectonomics, as much as we may roll out what you'd call the problems are, one of the finest solutions is the recognition of human dignity. And on that, I rest my case. My name is Jeremy Wentworth Stanley. We are able and willing to offer presentations, speeches, consultations, workshops, and the equivalents. And if this is something that would interest you, by all means share this message, but at the same time, do contact us at jeremy@respectonomics.com. jeremy@respectonomics.com. Thank you so much for listening and looking forward to your inputs and your opinions on what we should be doing with all this. Thank you so much.